This is day 39 of researching a stock a day until I can quit my job. We're teaming up to cover the Figma IPO.
Figma is expected to go public on Thursday in one of the most highly anticipated IPOs of the year. You've probably never used it if you don't work in tech, but Figma is the go-to tool for designers and product teams. It's like Google Docs, but for designing apps and websites. You can work together as a team on the same projects, all from your browser. And they're starting to move into vibe coding and website building as well.
Adobe tried to buy Figma for $20 billion in 2022 as it was clear they were losing the battle for interface design. A deal was announced, but regulators in the UK and EU voiced serious antitrust concerns, de facto blocking the deal, so Adobe walked away. Adobe actually had to pay Figma $1 billion due to a reverse termination fee in the contracts. The next time you think lawyer fees are ridiculous, just remember that they can come in handy sometimes.
Figma offers its basic product for free, but then charges more as your team grows. The model works extremely well. Nearly all of Fortune 500 companies use Figma, and the average Figma client spends 32% more each following year. They have over 1,000 customers paying $100K annually, which is a growth of 50% since the same time last year.
Okay, let's talk numbers. Gross margins are around 90%. Annual revenues have been growing around 50% a year since 2022. They also hold $1.5 billion in cash and have no debt. Interestingly, 85% of Figma's user base and 53% of the revenue is international, so there is some currency risk if the dollar appreciates significantly.
This all sounds great, but what's the valuation? Yesterday, Figma raised its IPO price to between $30 and $32, which would set Figma's valuation to around $18 billion. This would be about 22 times trailing 12-month revenue, which is in line with what the market tends to price stocks with this level of growth and business profile.
If Figma continues to grow at 50% for the next 3 years, its PE ratio would be in the low 30s, assuming a 20% net income margin.
So overall, it seems reasonably priced, assuming you believe in Figma's growth story continuing. Only around 6 to 7% of shares will be publicly traded, which is on the low end, so we could see some decent volatility on day one. While I'm personally bullish on this IPO and will be trying to acquire some shares on the day, IPOs are notoriously volatile and unpredictable events. Prices can swing sharp and fast based on hype and FOMO rather than fundamentals, and buying on day one doesn't always pay off. If this reaches stratospheric prices, I'll have to reconsider the long-term outlook.
With everyone feeling FOMO from Circle's IPO, I could see this getting out of hand very quickly, where the valuation would be less appealing longer term. If I can get some around the IPO price, I would look to get out of it short term, as I don't like to hold names that have too much social media attention. This is not financial advice.
Always do your own research.